joins us now. And Anurag, good morning. Thank you for joining us. More tariffs, more tariffs, more tariffs, and more tariffs. That is the only word which we're hearing now. And more tariffs. And before you
Yeah.
answer, one more tweet, more tariffs.
So, by the way, good morning. So, Nikunj, I think I think we spoke before the meeting, and I think meeting turned out to be pretty much like a non-event. But look, big picture, I think here is the thing: the trade, India's services trade is what US imports like 30, 32, 33 billion, and exports 25 million. So, service trade with US for India is largely balanced, right? Just a 7 billion deficit. It is a goods trade which is, in US is importing 85 billion and exporting just 40 billion. So there's this 40 billion gap. And I think that is going to be bridged with India buying more planes and more defense support and maybe some nuclear power and all of this high equipment, heavy equipment, machinery. I think that's the only demand, I think, broadly. Otherwise, I think the message stays the same that look, and I think there's a good data in the entire gamut of countries where US has deficits, starting from China, $300 billion deficit, then Mexico, 140 billion, Canada, 167. India is at 10th, which is like 40 billion deficit. Just so India is not a target. It'll just be on the margin, some trade-off in terms of look, be fair and just don't over tariff us, but broadly balanced, right? But of course, we'll have to buy some defense planes, right? That's a given, and I think that should balance the trade, right? So that's where I stand. By the way, even others, I don't think this is big because look at China. Ultimately, real tariffs didn't come on China, right? So it was all about a trade-off, and that's what we thought the whole story was, Likoch, earlier.
Right. Anurag, hi, morning. Good to have you on the show. And since you did talk about China, I wanted to understand, all the excitement that must be on, given that Xi Jinping met China's tech sector leaders. And after, I don't know how many years, you finally had a mention of Jack Ma along with him. Do you think that's
Yes,
sort of,
yeah.
giving more confidence to what was earlier just a tactical trade when it came to China? Could now we see China becoming a more structural story?
So Aisha, I don't know about structural because there are what three elements. So you can have a monetary policy stimulus. They have done that. You can have a fiscal stimulus. They are trying to do that. Structurally, real estate is stuck in a limbo. So the investor, unless you have new investors and with a declining population, I don't know whether structurally how they can revive this, right? They'll have to do a lot more than what they've done right now. But I think when you were trading 6 months back at a 9p, then everything is good. Even a slight change in stance can change the story. By the way, those pictures are pretty powerful. I think the whole world is watching that after 3, 4, 5 years since I think Jack Ma got into hiding, pulling back that IPO. I think now people notice that every company CEO who is there. So it displays an intent, right? And I think that's what world needed to know, and that can give a jump of 25 to 50%. I mean, notice China being a 18 to 19 trillion dollar economy, MSCI weightage had dropped to from a 35% to as low as 22, 23%. And India was right there at 20%. So that was also a kind of a overcorrection on China. So that's the mood, Aisha. I think the mood has really turned. It's not that, oh, go all guns blazing on China. But the point is, at some price, everything is attractive. So relative basis, China looks good. Even Europe is looking good, in parts, right? So that's the flavor. The point being, all this tariff and US exceptionalism and America first is forcing Europe also to relook within and try and revive the capitalistic instinct. So I think that's the broader story. So, long China, long Europe, that's where we are, Aisha.
Anurag, really appreciate your time and thank you for joining us. Let's go back to Nifty.